Hi, guys, and welcome to the hottest radio show in Plano, Texas, MissInformed, with yours truly, Missy Lou. Howdy ho, howdy hey. Happy Friday, y'all. We're in the studio, and we have got some people that are way smarter than me, and I'm really excited for them to inform me on things that I'm pretty misinformed about, but also you might be misinformed about. But before we get into all of that, we have a Foster feature today. What does that mean? Well, I'm going to show you. See these muffins right here? I made them for our new guest. His name is Jesse. Let's meet Jesse.
Yay, Jesse!
Thought those muffins were for us.
Jesse, it's so nice to meet you. I brought you this treat. I made it this morning for you. I also made them for my 2-year-old son because it's just peanut butter, oatmeal, and egg. I love you. Jesse is looking for a home. Can you tell us a little bit about Jesse, how old he is?
Jesse is a 2-year-old pitty mix.
And he's got some first stitches right there, it looks like.
He does. So every dog that is adopted from the Dallas Animal Services shelter is spayed and neutered. Microchipped, all the shots, everything you need.
And he's extremely sweet. He's a little skittish on the stairs, but besides that, I think we have a grade A dog here. And you're a lover, aren't you? Do you want to make out on air? Yes, you want to make out. You got good slobber. If you're looking for excess amount of slobber, he's got some really good slobber. Jesse, you're a good boy. I would like to go ahead and let everybody know that I'm actually a dog whisperer, and I can tell what they're saying.
Oh, good. Okay.
And so, Jesse, if you'd like to speak now, I can translate for you. Do you have anything that you want to say? Oh, so he's looking, what's that? Oh, he's looking for a female owner. Yeah, a blonde. Mm-hmm. In her 20s. What does it matter how old they are? Yeah. With a lot of treats and absolutely no cats. Got it. No cats?
No
okay.
cats.
No cats. Okay, got it. Jesse is looking for a hot blonde in her 20s with no cats. But he'll settle for anybody that wants to give him lots of love. So if you are interested in having a sweet, good boy like Jesse, well, you can reach out to Kristen, right? You want to tell him how to get a hold of you?
You can just call me. My number is 214-577-1473. Or you can email me, Kristen@generation912.com.
Or you can just DM us, and I'll make sure and get you connected. Jesse, we love you, and we think you're our favorite guest today.
He says thank you.
Thanks. Okay, now we're going to jump back on. Chris, thanks. Also, if anybody out there needs real estate, she is an amazing realtor and works in the Dallas area, and she can help you with all of your real estate needs. And same number, same email, or again, just DM me and I'll hook you up with her. And she's got a off-market listing. Can we talk about that one really fast? You know that one? Yes, it's in McKinney. It's so great.
Yes. So it's in the Del Webb active Trinity Falls community, and it's actually going live today.
Ooh.
Yes, it's a 2-bedroom, 2-bath with flex space, and it was built in 2023.
Wow. Are you going to have an open house this weekend?
Not this weekend, next weekend.
Okay, well, reach out if you're somebody who's looking for, and that's a over 55 over 55 community. So if you have somebody that's looking, give her a holler, because I'm sure it won't last long. Just like Jesse won't, because you're such a cute, good boy. Reach out, y'all. Okay. Thank you, Kristen. Now you see me, now you don't. Okay.
Do you have any more of those treats?
Oh, yeah, I've got more treats. You want another treat, Jesse? Here, this is all for him.
Oh, well, thank you.
Sounded good. Sounded fit for human consumption.
Well, it is. It's good for the babies. Or did you want a muffin?
It's okay.
Sorry, Yuck Monkey. You're always throwing to the side. Let's go ahead and get this show started. Today we have the Yuck Monkey who you saw on the show last time, but we also have this very dapper gentleman who is going to tell us a little bit about himself, what he does, and just, I don't know, grace us with your presence. Tell us something great.
It's Friday.
That's beautiful.
That's a good thing.
Yes, sir.
My name's Mark Miller. I'm president of Secured Title of Texas, which we're based out of Plano. Our holding company out of Kansas City. And this is my 47th year in the title business.
Wow, congratulations.
Trying to make it to 50.
You're crazy.
I
couldn't imagine.
You have to be.
You're going to be a little off your rocker.
Yeah. You have to like constant change, and that's what we're basically going through. And then we overlay that with some other challenges that we're having as an industry, and it's going to be an interesting year, I think.
When you're dealing with constant change as a career, I feel it exercises your brain, and I think it just keeps you healthier longer. You keep your wits about you longer.
Yeah. Well, my mentor, who hired me in the business in 1977, will be 92 in July 4th. His name's Billy Vaughn, and
Hey, Billy.
He is still in the title business.
You're kidding.
Oh, no.
94
Yeah.
and still doing it.
Still in the business. He calls me every day, 5 days a week, and has for 25 years every morning. And we have a conversation every morning about the business, and he's just amazing. He's a walking dictionary of this industry and has been very influential in my career and my personal life as well.
Well, that's how people are successful. They surround themselves with other people that are successful so that they can have counsel when needed and just bounce ideas off of.
Yeah.
So
If it's something I don't have an answer for, I call Billy, and Billy usually has some guidance or the answer for me. And but just a wonderful guy, and he's kind of the Ebby Halliday of the title business.
Oh, I love that.
He's been in the title business 63 years.
Wow.
That's what he does.
That's what he does. That's what he lives and breathes, and that's what keeps him going.
How impressive.
Yeah. So
Well, you're our go-to whenever it comes to questions that have things to do with title, because I'm always looking for guidance. So he might be your mentor, but we look to you for guidance whenever we're having issues with our contracts.
Right. Well,
not that I ever have issues with contracts.
No. Well, and then I've got a guy right next door to me in my office, Kerry Prysock, who is our general counsel and who is the most valuable person we have in our company.
Yeah, you got to keep him happy.
He's my guy I turn to when I need to get the answers.
You want to take him the rest of this peanut butter?
He's probably already had his.
Oh, okay.
I have about 3 zoning issues to holler at y'all about immediately. So,
Speaking of issues in title, have y'all heard about the hackers? Have y'all heard about the companies getting hacked?
Oh yeah,
been affected by it, yeah, directly.
It's kind of a new strategy, if you will, because if you look at it, they first most recently hit Fidelity National.
Mm-hmm.
And then they follow that with First American, and so you say, "Wow!"
And those are big companies.
Well, they're between those two companies, they represent over 50% of the market nationwide.
That makes my heart hurt. Like it scares me.
Yeah, and so I think these hackers that took credit for this were out of Russia, focused on the last 10 days of the month in November and in December. Well, that's
interesting.
And they did that through the holiday period as well, obviously with both of those through so they hit right before Thanksgiving and right before Christmas. And so that creates the highest level of anxiety because now suddenly when they hit, both those companies had to bring their operations completely down. And when they did that, that means an escrow officer can't walk in and look at a screen and begin to work through their transactions. So all transactions for both those companies over that period of time froze for 10 days, 10 business days.
And they're already running skeleton crews.
Yes.
That's terrible.
And so their approach was, and it's kind of like you feel a little bit of comfort because I look at my size and I always represent our company to be boutique.
Sure.
They're not after me. They're after the guys that are the big national players. And what they're trying to create is they go in and hit them and then they create ransomware. So if you want your data back, you can buy it back type scenario. And the interesting thing about the underwriter industry, particularly with Fidelity and First American, is they also had moved into loan servicing. So now they've got a breach into the loan servicing, and it's just been disclosed with Fidelity that their loan servicing company had a data breach of 1,300,000
So much data.
borrowers that breached of data.
They're low-hanging fruit for a hacker is what it is.
Yeah. So anyhow, and it's hit, First American had hit at the end of the year, so it makes the other underwriters, because if you kind of look at the top, it's Fidelity, First American, Old Republic, and then Stewart. And Stewart being publicly traded, Old Republic's private. So it's sort of like who's next?
Right.
Who are they going to come after?
Because they're not going to stop.
No, and in both of those situations, the data or the security integrity was of the ultimate that you could hope for. In other words, they were secured by the analysts that came in and looked at their companies. So that tells you how sophisticated these hackers are to get into that level. So that's kind of the macro level of getting hit at that side.
So the goal is to not be a target.
Exactly. And then the micro level is when we get into just the wire fraud side of it. And that is out of control as well.
Running rampant.
It's running rampant. So I've always preached to realtors, the commonality of this business is when the listing agent selects the title company. And the old philosophy is seller pays, seller picks.
Correct.
For that, right? But what ends up happening is once you yield to that selection, the post-closing side of that is that the buyer, then to be owner, is going to have to live with the title policy. And they don't know who that policy is going to be issued on. So I've always said to them, if you're going in on a side and you're the buyer and they select the title company, there's three things that I would do if you're unfamiliar with that company name. The first one is I'd want evidence of their E&O insurance on that company. The second thing I would want is a copy of their underwriters that they represent, because there's a selection tier that you could look at, to the top tier down to a regional. And the third thing I would ask for in today's environment, I'd ask that title company if they have a cybercrime policy, which we do. We carry a cybercrime policy on our
What does that
company.
mean?
That means if you get hit with that cyber attack and that fraud occurs, and your escrow officer or assistant through that thinks that they're sending it to the seller when in fact they're sending it to the hacker, and now you got a $100,000 wire or $400,000 or whatever it may just went out the door, the cybercrime policy kicks in to protect that. That's the only protection you have. You're not protected under an insured closing letter. That's only for fraud of the agent themselves within the title company, not to the fraud perpetrated upon them. So what that means is if you go in and they don't have cyber and they get hit in that wire fraud and now 100,000 went out the door, the only solution is that title company or that location has to supplement that 100,000 into their escrow account. And I can assure you they don't have that kind of cash on hand.
Oh, man.
So it's a real high risk, and I think the fallacy sometimes in our business is that agents have a tendency to think that all title companies are equal in financial
They are not.
standing, and they're not. I mean,
I'm
it's
here to tell
simplistic.
you. I'm here to tell you that they're not. I do real estate. I'm not a big producer, like I said last time, but I do practice real estate, and I do it all over Texas. And the worst title company I ever had an experience with was in Waco, Texas. I don't know if you've had the pleasure of experiencing any business in Waco, Texas, but everybody there should be sued, in my opinion. I mean, they're spitting in hands and they're spitting and shaking and calling it a deal. And some of they can't find information. They say they're looking for back files. There's no back files. You know what I mean? I think they're just going back there and sipping on the sauce. I have zero confidence in any title company that's in Waco, Texas. I said it.
We have no fly zones. We have title companies that we prep our team for, just to be aware of the last transaction, what you need to do, how much you have to stay on top of them because of what they are lacking. I won't drop any names whatsoever, but I mean, they are out there.
Yeah, I'll bring these guys in and do a remote close, because that's what you can do for me. You can help me with a remote close. So wherever I'm at, we can just send a notary, right?
Exactly. And if that deal was in Waco, then I would get the title information out of Waco, but I would underwrite, close, fund, and record that transaction from Plano.
Yes, that's exactly what I would need.
So my philosophy is when you get into, and Waco's not rural, but if I get into rural areas, I like to get my title work and then get that local agent out of the transaction.
And it was Valley Mills, which is very close to Waco, but it's a very rural area. So, I mean, it did fall into that category. And, man, was it a booger to get closed.
Yep.
And it was because of the title.
Right. And, the other alarming, from what we've gone through, and let's just say the last 6 months, with transaction going down, and just we have more title companies, mortgage companies, and realtors than we do have transaction side.
Yeah.
It's put a compression on the market as a whole, and there are a lot of title companies that are having trouble. And right now I'm aware of 5 title companies statewide. They're in receivership.
Oh, wow.
Within the next week, I'll predict there will be a brand in the market today that will no longer be in business because they've run out of funding. And
who is it? Tell me. Come on.
Can we put prop bets on this?
It's just, listen,
I'll give you the sidebar on that one.
It's just you and me and my mom listening. It's fine. We won't tell anybody.
Mr. Manton.
I can see me in the deposition now. Mr. Miller, did you have a discussion on a podcast about...
There was something in the peanut butter. That's what you tell me.
So the alarm button is up out there, and then there's going to be, as always is, more title companies popping up, Texas is kind of the envy in the United States of the title insurance industry because our rates are promulgated by the Department of Insurance. We probably have the highest rates in the country. So everybody's trying to get in here. So the next thing you know is here's pops up, XYZ title, ABC title, CDF title. Everybody's going, who are these people? And sometimes they're just moving from one failed operation into creating a new one with enthusiasm of capital from outside the state, and they're going to replicate the same thing. So there's just not a very informed decision. It's more, unfortunately, in the residential side, sometimes becomes, they expect performance, but there's a lot of emotionally driven decisions about
business of people.
Yeah, who they select to do their business with. And so I just continually to lend caution about being more aware of who you're selecting and who you're accepting as the title company, and ask some questions up front before you get into a signed contract, because once it goes into escrow, it's an escrow.
That's exceptional advice. And I just want to review really fast the 3 things that you told me to be asking for whenever someone else is recommending a title company that's
Right.
not my preferred. What am I asking again? Cyber
First is the E&O policy.
E&O
So
policy.
you'll make sure that's current. That should be at least $1 million. And then the cyber crime policy.
Cyber crime
Which
policy.
should be at least $1 million. And then the list of the underwriters.
List
you
of
might have
underwriters.
an independent title agent that only represents 2. You might have 1. As our example, we represent 6.
Oh, wow.
And why is that important? Well, about 1 out of every 4 transactions, and I anticipate that going up, have some kind of title-related problem.
Yes.
And so I may start with underwriter A that I issued that commitment on, and now I've got a cloud on title that I have to address, and underwriter A says, we don't want to do that deal. So I got to go down underwriter B, C, D.
Gotcha.
And my 6, out of that, I've got a 100% hit on being able to find coverage for that. And that's helpful when we have our general counsel in that side. So the underwriter list is really important, because I kind of say if you're the gold seal, or whatever it was for good housekeeping, you remember what that was?
Yes.
It's kind of like your designation. Those are, if you represent Fidelity, a Chicago, an Old Republic, so I represent those 3, First American, Stewart. If you see one of those 5 in the mix, then you've got an agent that's sort of in good standing, if you will. If you're with an agent and they present a list to you and it's with the lower tier of underwriters, that means they're more in the regional side. Doesn't mean they're bad companies, because I have contracts with 3 agencies that are more regional inside. WFG is national, but more perceived regionally, and they're good companies. They're just not the size. So their surplus for paying claims might be 1/4 of what a Fidelity or Chicago would have, and the surplus is where the money's going to come from to defend in the event that you
So
have a
you're just
claim.
open to more risk, potentially?
Yes.
By going regional?
So anyhow, when you look at that list, the thing is particularly if you're an agent, our splits are set by the Department of Insurance. So I don't benefit if I write more money to me on Fidelity versus WFG. They're both the same.
Oh, okay.
So there's no financial incentive. So if I was an agent and I said, okay, I'm going to concede to XYZ title, here's the list of the underwriters, then you as the agent could select what underwriter you want that policy to be
I didn't know
issued on.
that.
Absolutely.
Wow.
And from that, then now you've done, in my opinion, you've created your own fiduciary responsibility by putting your client with the best underwriter in performance of the 3, 5, 2 that they represent.
Would I just directly talk to that escrow officer
Yes,
and let
yes,
them know?
That's the first thing. The receptionist probably won't know that, but the escrow officer will. Because once the order's generated, it goes into whatever their respective department is, they're going to have a decision tree, and they're going to say, put this order on this underwriter. They're making that independent of any of the parties.
Wow.
But you could say, whoa, time out. I see that you've got a contract with this company, which I'm not familiar with, but I do see that you represent Fidelity, and I'd like to have that policy issued on Fidelity. And they're going to say, that's fine.
I want to get that underwriter in our
Spectacular.
office.
Yeah,
Let's get her a desk.
Yes, no argument. It's
Yeah.
the only place that you really will have control in that transaction to at least be assured that you're going to get the title policy that's going to give the highest protection and will be the most significant if title is challenged. And title is challenged.
I am
there.
so grateful for that nugget of information. I hope y'all were listening. You better rewind it and listen to that again because that was some good stuff.
Yeah.
Mike, do you have anything that happens to you in title
Absolutely.
comparable to that?
Well, I was going to ask him to kind of elaborate on you said clouded title, for those that aren't aware, but that happens all the time. In the chain of title, we have a seller or a trust that happens to have beneficiaries that we had no idea existed. Maybe even the spouse didn't know existed.
Yep.
So if
Surprise.
Or heirship. Heirship's a big issue. The other thing I would encourage for agents to do is if you're going in and you're going in for a listing appointment, just ask one more question. And the one more question is since you've owned the home, has anything happened that might affect the title to your property? Because what happens is nobody asks that. We get the listing, you go under contract, and then the title company kicks the commitment, and all of a sudden you go, whoa, abstracted judgment, federal tax lien, here's a list pendants.
Mechanic.
Yeah, mechanics liens, whatever they are, and now all of a sudden all the target dates are on that contract become immaterial.
I'm going to use on the lending side of things, when we're reaching out to make our introductions, once we receive a contract to the listing agent, that can be a question that every lender should be asking. Just build a rapport. I mean, that's you're going to have to circle back to get that answer to that question anyways. That's a great idea.
Yeah, tell me now because I'm going to find out eventually.
Exactly.
And it's
Yeah.
going to delay.
And
It's going to gum up the works if you don't tell
It
me.
could kill the deal.
Yeah.
Absolutely.
It could impact on the borrower side because now you've locked in at a good, all of a sudden like, oh, let's take that rate. You lock in, and all of a sudden now, 2 weeks in, we can't close.
Right.
So what are we going to do? We're going to do rate extension, or
And who's going to be paying for that?
Who's going to be paying for that? You get into those kind of issues. So I think it's something that they don't spend enough time on, and or if they do have that dialogue and somebody says, well, as a matter of fact, I'm going through a divorce, or somebody just died, or whatever it may be, then that documentation at that moment in time is critical to get to the title company so we can begin to assess the documentation itself as to whether we can actually convey title. And until we see that, make the assumption, well, I've got a divorce decree. Well, has anyone looked at it? Because half the time they don't document the divorce decree properly for the conveyance to occur, or if it's an OLT lien to deal with on that side.
Or even just to divvy up the money at the
Right.
end.
Or we get a deal, and now the divorced spouse has decided, now I'm going to sell. But guess what? The conveyance was with a quitclaim deed, non-insurable.
Right.
So what do you have to do? Absolutely. Last thing that divorcing spouse wants to do, have to contact the other spouse and get a signature
Yeah,
on,
they're sick of
on a
them.
warranty deed.
Yeah.
I mean,
That quitclaim deed.
So just a little dialogue up front, just talking about where they, getting a sense of where they are. I always tell these, your drip campaigns and when you're marketing is, what would I talk about? Well, you don't have to call them up and say, are you thinking about buying or selling, right? How are you doing? What's going on in your life? These are, your database. Anything new that's happened, whether that's children or a divorce or a death or whatever it is,
Right.
just getting a little bit of forensic will give you some information to say, you wouldn't happen to have a copy of that, would you? Or
Yeah.
whatever it may be. And that's when I would immediately be contacting my title company saying, can you look at this for me and tell me if we've got any problems? Is it properly probated from a will standpoint? Because these are all the hinge points we run into. And now we're down and we're compressing down to the closing date, and we're having issues with trying to get resolution to that. So there's a lot that goes on behind the scenes that could be prevented if we had more information on the front side.
So what he's saying is communication is key. As a realtor, you have a fiduciary duty, but you also need to make sure that you're educating your clients and finding information out so you can help them. Whenever I was greener, and I had a $1.3 million listing over in Frisco. It was a beautiful home, and I got both sides. Now I know what you're going to say. You don't have to say it, but I had both sides. And right before closing, we were about a week out, and the seller calls me and he says, "You're going to be mad." That's never good when they say that.
Right.
I filed bankruptcy, and I just want to make sure that's not going to affect the closing. You're filing or you filed?
Right.
Did you do it?
Yeah.
Can you call them back and stop it? No, you did it and it's
Yeah.
done. So we're not going to close.
Right.
You have shit the bed, pardon
Yep.
my French.
Yep.
And it was a complete catastrophe. And the buyer was furious, thought there was some favor. Like we had to make an agreement to pay back a set amount of money to make the buyers happy and not take legal action against the seller. And I had to help navigate that. And you mean we're not supposed to practice law. And so, I mean, you want to talk about just pouring sweat throughout that whole deal to get that money paid back to the seller. And the seller was just in trouble. That's when they were selling the
Right.
house. Their business
Right.
was going under. You know, it was a shame all around. But because I didn't communicate effectively in the beginning, and I'm the first one to admit fault, I didn't communicate effectively in the beginning and ask questions like that. If I would have talked to you and you would have been able to educate me and I would have asked him, is there anything that can affect title? You know, let's think about title for a second. Anything about the house that can be affected? He would have probably said, well, things are really bad financially. It's not just selling the house I need to do. I'm probably going to file bankruptcy. I could have stopped him and said, that's a bad idea.
Yeah.
Hold your horses.
Right. Or what do we have to do to get through the bankruptcy and dealing with the bankruptcy
Navigate.
attorney or the courts? A lot of times we get engaged all the way through into the court because we're trying to get a deal closed, and now we're communicating with the judge, and we're working to set up the platform that they will agree to.
See, I didn't even know you could agree. I thought
Oh, yeah.
bankruptcy was a complete hard no.
Well, it's not a hard no, but there's a lot of different circumstances where when you've got I'll just put it in the generic side, when you've got the intervention of the court, and you can communicate into the court, and the court will work with you as the title company, and that's usually when we're in that scenario where I'll have Carrie, who our general counsel, in contact with the counsel and through the courts. And that's where we navigate through trying to get a deal closed and funded and make sure that the court sees the settlement statement and approves that settlement statement, and the funds go into the court, et cetera, et cetera. So,
Mike, how do you deal with bankruptcies whenever someone comes to apply for a loan and they've got a bankruptcy? How does that affect them?
Well, first it depends on if it's a Chapter 13 or a Chapter 7 bankruptcy.
What's the difference between those?
The Chapter 13, you're going to enter into a repayment with your creditors. Chapter 7 is kind of like a cold hard stop.
What's the point of filing bankruptcy with a Chapter 13 if you got to pay him back? I thought I thought a bankruptcy file would be to alleviate you from obligation.
Well, you'd like to keep some of the items that are probably included in that bankruptcy.
I see.
A house, a vehicle, something of that nature. So it's important to ask those questions up front to investigate. Even if the bankruptcy says that it's past 7 years on the credit report, you want to get that paperwork as a lender up front. And you also want to make sure that the title company is aware of that too. And you can ask questions about divorces, marital status, and relay that information up front. Because in my opinion, title is the silent secret, the biggest part of the transaction.
I always seem like a referee.
A referee. Yes,
that would be one description.
a referee with all the money.
We are the great counselors.
I was lucky enough to work for a title company a couple of times, and it gave me a whole newfound respect watching the escrow officers jump through hoops and not getting the sleep or the food that they need because there's so many fires that they're trying to juggle at once. And the worst thing you can do as a realtor, let me just say this, the worst thing you can do as a realtor is keep calling them and asking them for status updates and messing with them when they're in the middle of trying to take care of your file. They can't do the work for you and make the calls they need to do to check the things they need to check for you if you keep calling them. So
Right.
Stop calling them.
Well, and you can, we do key date letters. So if
Oh,
you're
that's
in that
nice.
progress, we're updating that. So there should be some proactive opportunities of updating through that process. But there is a lot that goes on behind the scenes, and some of these things are not resolved until the 11th hour.
Right.
Yeah.
While we're going into a closing. That's also why I like to have my in-house counsel, because Carrie does all of our doc prep. So if we get
We
into a
love Carrie.
situation
Yeah.
and we
Shout out to
decide,
Carrie.
okay, we can close this, but we need this affidavit or this document, Carrie's right there, boom, kicks it. We sign
Nice.
off and we can go forward and close on the transaction. So there's a lot that goes on behind the scenes. And bless their hearts, those people work unbelievable hours, just like as their industry does. And that's why I always, philosophically, I've always said my key people are always available 7 days a week after
Wow.
5.
Absolutely.
And we're available on weekends, and I don't care if I'm on my backswing. If you call me, I'm going to answer, and if you've got a problem, we're going to get it addressed. because that's when you're really in the heat of the transaction,
Yeah.
if you will. And
And
the
it
contract.
typically tends to get sticky after hours and on the weekends.
Yeah, that's exactly right. Who can I call? And that's the kind of scenario. So, but overall, the industry, I'm on the board of trustees for Title Pack.
Ew, what's that like?
It's interesting.
How long have you been doing that?
Well, this will be my second year serving on that, but you get to see a kind of the global perspective of what's happening in our industry. So our industry overall, statewide, is down about 40% in 2023. And strangely enough, as typical would be for the Department of Insurance, the government side, they said, well, now that you're in a down market, we probably ought to just go ahead and decrease rates while we're at it. So
Yeah.
we've just gone through a rate hearing with them, and I think we're going to settle with a rate reduction of somewhere between 3 and 5%, probably in June of this year, from what they were initially wanting, which was about a 15% reduction.
Hold on, I need you to repeat that. Say that again. I'm so, if I had to tell like Jesse, I'd be wagging right now. Say that again.
So you can anticipate in probably June, our rates will be reduced 3 to 5%. Now, our rates are an interesting tier factor on how they're calculated, but there will be some benefit to that. We had only 2 years ago had done a self-imposed rate reduction, and we also increased the rate credit on R8s for refinance transactions. So we kind of fell on the sword ourselves a little bit with that because we've
Sure.
been challenged with our structure by some of the names like Trammell Crow and others that are paying big premiums on commercial deals. And we won in that, but we thought, you know what, they're just going to come back. So why don't we fall on the sword a little bit and let's drop that higher end side down slightly to impact that, and let's give a better credit up to 50% over a 7-year period on the refinance of the transaction, and that went through. So we're really quite surprised because 3 to 5%, I can manage and absorb that in a major metro, but if you go into a small rural town and you've got 1 or 2 title companies in that county, that's pretty impactful to
Absolutely.
their revenue side. So hopefully we'll settle on something that is reasonable, but we've got a very, very strong land title association.
Let me ask you this. Do you think it's going to be more volatile considering that this is an election year?
I actually am pretty optimistic about this year. I mean, first and foremost,
Are you running for president? Because I'm optimistic if you're going for that.
I mean,
would you consider?
we have to
We do a write-in.
We have to get a softening. We got to get a softening in the rate.
Yeah.
Right. And we're already seeing that. Correct.
Correct.
Whether we'll get a rate reduction in the first quarter or not will be interesting to see. But typically in an election year, you're going to see that reduced just for nothing else, for political
Correct.
Purposes of that. I'm not as much concerned about the residential side. I'm more concerned about the commercial, and about 50% of our business is in commercial, but we're with more of the local guys. But you've got over $10 billion in debt that is coming due in the commercial banks in the next 12 months.
This year.
And those debts coming due are probably at an interest rate of 2 to 3%, and these rates at the commercial level are somewhere around 8.
Some are balloons.
Yeah, you got balloons, and so you've got lenders that are going to say, unless you put more capital in the game, we're not renewing this, and so therefore, I'm starting to see some foreclosures and foreclosure postings in commercial. I think it'll be office building first, possibly multifamily, but more tiered out for people that were less of the producers and went and said, hey, this is great, let's go buy a apartment complex in Lubbock, Texas, and syndicate it, but they don't have the capital for the long stay if the market shifts. And you got now compression down on the rent side in the multifamily because there's so much multifamily out there.
Yeah.
So I think that's where our volatility is going to be in this year. The interesting thing about my business is tracking it, whether we're going up or whether the industry is going down. There are transactions.
If you were getting ready to buy, I don't mean to cut you off.
No, it's fine.
I get excited. If you were a buyer and you were getting ready to purchase this year, when would you strike? When would you actively start looking, knowing what you know about the rates and what you're anticipating with rate drops?
I mean, I don't think it's unreasonable to strike right now, and because you could comment. I mean, would we get more than 100 basis point reduction in our rate in this year? And I think the answer would probably be no.
Right.
Right.
Well, I mean, right now we are at the top of the roller coaster. I mean, people are noticing. It's cyclical, like you were saying, and this is my 23rd year into the industry. And
Y'all are old.
I have zero hair.
Believe me.
Well aware, thank you. But it's cyclical, and the people that are normally on the fence due to the holiday, just to the holidays, are now noticing that the rates are trickling down, and I can't tell you how many of the applications that I took over the last 18 months are just in a stalemate. They're waiting.
Right.
And now people are the rates are grabbing people's attention, and it's just going to be. I'm very optimistic as well. The rates might not be exactly where some of those people are wanting to. People are probably holding off for a 5 or a high 4. But if those people are waiting for that to hit, they're going to be in a bidding war again, because nothing is stopping the influx of people moving to Texas.
Exactly right.
Well, and in Dallas specifically, we're a
Right.
nucleus, we're a hub. We're always going to be making.
Well, rate gets lowered, inventory starts the same pattern. So now you're going to have more limited selection, right, of the inventory the lower the rate gets. But I think people lose a little bit of sight of, and I had a stat out there that I forgot to bring, but I can remember in average appreciation in Collin County, as an example, last year was a 17% appreciation.
And it's projected another 20 this upcoming year, I
so
believe.
You look at the rate and you look at the payment, which is relevant, but you also have to look at what's happening with the house once you buy it. You're building equity.
Right.
Sure.
And where else can you go to build equity in that manner?
Not
form?
crypto.
No. No. My only other concern is just simply where we have been and where we are now is one of my contacts I have is Keller Mackey, which is Mackey Wolf. They're the largest foreclosure firm in Texas.
Ooh, cool.
And so I kind of keep a pace with him as to what's going on.
Interesting.
Postings are up, but pull-through is only about a 10%. So I think last month postings might have been somewhere around 200 to 300 homes in Collin County. 10% is going to be about a 20 pull-through. There's a little bit of government money still left to help bring the borrower current, but that's running its course. And then if you look and say, okay, they've tapped out on their credit cards, they've tapped out their 401k, they've depleted their savings, they're getting to a place where they can't begin to make payments on other things that might be impactful that will result in a filing against their title in some manner or form. So the only other thing I think could come from that, and I'm interested in your opinion, is will we see, because of that, regardless of the rate side, a refinance cash out movement here? People can qualify for that because they've tapped out everywhere else.
Well, right now, one of the most popular questions I've been fielding for the last 12 months is tapping into that equity.
Oh, yeah.
A home equity line of credit right now is probably my most popular question in regards to a home equity loan. It just doesn't it does depend where you are financially, but more times than not, I am educating my clients on the advantages of a home equity line of credit versus a home equity loan of credit, because the only time it would maybe make sense is if they are sitting on a free and clear house, whereas if they are, if they purchased in 2019, 2020, and they're sitting nicely at a 3% rate, that's going to be taken out and it's going to be replaced by the 6.5.
Right.
So.
Right, and possibly if they do go through that and they can get a decent amount of cash out, maybe they can pay one of those credit cards off. They're paying at what, 20 or 30%?
21%.
21%.
Yeah, average.
Ew.
That side. So back to the answer to the question, as I always say, this is a great time to be stepping in and buying if you've got that capability.
Yeah.
And get a little bit in front of the pack, because I'm firmly convinced we're going to move into a spring selling season. And
I agree, too.
We're going to have the activities going to lift, and I conclude with saying, thank God.
Yeah, right.
Yeah, we love business and we love working for you, that's for sure.
Right.
I just want to take a moment. I know that we've kind of gone over time. You see that clock right there?
I do.
But it's been such a great conversation. Before we end, I have to tell you guys that I'm very grateful for your time, but also Super Home Warranty is out there and wanting your business too, and they are here for all of your home warranty needs. So if you have anybody out there that is looking for a home warranty, please consider Super Home Warranty, because they're more than a home warranty. They're home warranty reinvented. They offer different solutions like a home care package so that you can get things done in the house that you wouldn't necessarily be able to have with a traditional home warranty. For more information, you can always just reach out to me directly and I can assist you with that. And if you're a realtor out there and you're looking for a trusted title company. I mean, if you've been listening to this guy, he obviously has a brain. He doesn't hire yo-yos. Some of the people he has, I've been able to work with and meet, and that's why he's in the seat. And I'm very grateful for the partnerships. And then we also have the Yuck Monkey, but he does more than dance. Yuck Monkey, tell him who you're with.
I am partner and branch manager of RedZone Mortgage Group. We are based out of Addison. And if your ears perked up to any of the information that you heard today in regards to getting ahead of the curve, or if you have questions, or if you think you're not there yet, or if you want to make a move on an investment property or multiple, now is the time. Feel free to reach out. We will answer any and all questions. www.redzonemtg.com.
There you go.
And before we close out, I want to say that I have the opportunity, me and Mike are actually teaching classes for a couple of your offices. We're teaching a Canva class. It is a 2-hour CE class, and it is
Get them hours.
It's going to get your CE hours because education is key for us to be successful. Tuesday, January 16th, 2 to 4, and it is at the Secured Title of Texas, 2805 North Dallas Parkway, Unit 140, and you can RSVP to Susan. I'll drop the flyer. But we're also setting up for another class I haven't told you. I talked to the other rep, the one with the horses, Michelle.
Yep.
Michelle, and I'm going to be able to teach that class for her too. So
On a horse?
Yeah, she said you wanted to bring a bag of carrots to her property.
Yeah. Listen, I love horses. It kind of helps soothe my soul, and I'm a busy girl on the go.
Shoot.
And so I'd love to pet a horse. I mean, Jesse got my fix in today. I was able to, get some love from a big dog, but I want to get out there. And
Yeah, you need to meet Hank. She's just got a new one, but Hank's her main one, and he's a cool horse.
She didn't tell me about Hank.
Oh, Hank's, I think if it got down to it, that if she had to have a separation of state, Hank would be going with her.
Oh, that's hilarious. Well, I'm going to go and pet a horse this weekend and then be prepared to teach that class. So if you're looking for CE or you just want to be better at marketing, I'm here to help you because I'll take the Pepsi challenge any day of the week when it comes to Canva. I don't know anybody that can do it faster, and I say that with full confidence. So please come to the class and get smarter and better so that you are ready for the spring selling season.
Yes.
Guys, thank you so much for watching. I wish all of you the best weekend. And hey, if you're going to shake out some real estate, we're here to help you with all your real estate needs. Got it? All right. We'll catch you next time.
Go Cowboys.
Bye, everybody.
Bye-bye. Ciao.